Success is the sum of small efforts repeated day in and day out. Robert Collier. My friends, 5 days a week, 10 to 15 minutes each and every day. If you will commit yourself to this small amount of work, this small effort, the sum will blow you away. And people will say, well, Tom, how long will it take? It will take as long as it takes, but once you become a market master, you become a charting expert, the world is your oyster. Don't worry about how long it takes. You will earn back your effort in short order. Imagine having the ability to watch the markets, to know when things are ready to move and where to put your money. Imagine how prescient, how powerful that would be. But you're not going to get there if you don't practice day in and day out 10 to 15 minutes every day. That's all it's going to take, 5 days a week, or every day the market is open, never more than 5. Let's jump into these charts. Stocks are mixed for the day. Bonds, gold down, Bitcoin up. Let's look at these charts. What do we see as the week starts? Well, we can see our Heiken Ashi candlestick is green. It's not reaching a higher high. It's a smaller candle. It's still moving up the trend line. That's a good sign. Price percent oscillator is flattening. Derivative oscillator gaining some upward momentum. Take a look at the 2-day. What do we see there? Well, we've got a green candle that's forming after 4 days of sideways sliding and lots of indecision, pushing through the 2-day trend line. We'll see how things continue to move. Price percent oscillator is a little more than flat. Derivative oscillator positive but losing upward momentum. And you can see as we look at the intraday chart, sort of the way that the market moves in a little surge down and then popping back up again, but not enough energy to flip over the price percent oscillator. Derivative oscillator is still negative. So we'll keep a close eye on the 2-day and a close eye on the weekly and see how this week continues to shape up. The S&P up just a little bit, 0.03%. The NASDAQ down just a little bit, 0.02%. Red open box candle forming, still above the weekly trend line. Price percent oscillator a little more than flat. Derivative oscillator green gaining upward momentum. 2-day chart as it loads up slowly. What do we see there? Again, this sideways slide underway. Green spinning top forming. Price percent oscillator is about flat. Derivative oscillator is positive, losing momentum. And again, on this half-day chart, we can see where things sort of bottomed, and over the last 2 days, trying to move up, sort of a doji there, a doji there at the end of the day. Price percent oscillator still negative on that smallest chart. Derivative oscillator negative, losing downward momentum. So let's keep an eye on stocks as the week moves along. Of course, we have that weekly vertical crossover that occurred back on the week ending the 5th of November. Same with the S&P 500. Now we move on to bonds. Bonds, the big downer for the day, 1.26%. We had some real concerns about this weekly vertical crossover. We went over that on Friday, how weak that was. And of course, those concerns weren't ill-founded as we start this week off very, very weakly. It is, really pulling away even on Monday from the red signal line. Again, we'll see how the week continues to develop, but that derivative oscillator never went positive, which we always like to see with a crossover. That didn't happen. Still negative. Price percent oscillator pulling away from the red signal line. Red down candle forming. 2-day chart. This is going into the 3rd day. Remember, on Friday we had a red candle. Price percent oscillator was flat. Positive but flat. Now heading down. Derivative oscillator was losing momentum, still doing so. First day of this latest 2-day candle up, blowing through the 2-day trend line and heading down. Look at this half day. This was another reason we had concerns about the weekly vertical crossover. We already had 2 days of strong down movement going in, 3 days going into, 2 days going into Friday, and then on Friday itself, and then down on Monday. So some real concerns there. Derivative oscillator gaining downward momentum. Price percent oscillator heading down at a steeper angle. So again, concerns there. That's why we didn't feel great about that weekly vertical crossover. And that is part of the nuance that you learn as you learn the personality of the stocks and ETFs you're interested in tracking. It is tracking them on a daily basis, learning how they perform, learning what the ins and outs of them are, what you can count on. Can you count on a signal for down movement being the fact that the 2-day is not crossing, that there's a penetration of a trend line? I mean, all the different things that can cue you into that particular personality of that particular stock or ETF. That's what you learn being with us every day, being in the market every day. Let's look at gold, down a little bit, 0.15%. Now, of course, gold starting off with a nice green up candle for the week, not reaching a higher high, wick on top. Price percent oscillator losing ever so slightly, a little bit of energy. Derivative oscillator continuing to move up. 2-day, as we take a look at the 2-day, again, we can see we're just flat candle, smaller candle, wick about as high as last week's was. Price percent oscillator consequently losing a little bit of energy. Derivative oscillator still oscillating upward. And of course, we can see where we've had this sideways slide going on for several days now. Did push through the half-day trend line as the day started and stayed there in the afternoon on Monday. Price percent oscillator positive, heading down. Derivative oscillator positive, losing upward momentum. So that is where we are on gold. Keep an eye on the prize. I've already cashed out of my gold. It did well for me, and I told you guys I cashed out last week. So again, don't have a profit until you take one in your practice trades. So again, practice, learn, develop your own style and sophistication. Now, let's go to Bitcoin. Up for the day, 2.14% on the New York Stock Exchange Bitcoin Index. Now, I know we've got different indexes, different things that pop up and show stuff, such as when we look at BGTC, that is the Grayscale Bitcoin Trust. Little different. It was down a little bit for the day, whereas the New York Stock Exchange Bitcoin Index was up for the day. Now, as we look at those, though, we can see basically in most cases the same pattern emerging. So we're going to practice trade something, and we are practicing on the New York Stock Exchange Bitcoin Index. As you guys know, as I ended the week last week, we have lots of new things coming. We have futures markets in Bitcoin that are being developed, which are exciting. We have, of course, Grayscale there. We have Grayscale Ethereum, both Grayscale Bitcoin and Ethereum. We also have all sorts of ETFs in the Bitcoin, in the cryptocurrency space. We have, data, folks who are providing different data. We have various indexes that are available to us. We have the new next-gen economy. We've got, again, innovative transaction and processing ETF for cryptocurrencies. We've got all sorts of industry innovators, so the work that we are going to be doing at Charting Crypto is going to help us follow a number of these. But as we look at Bitcoin today, what do we see going on? Smaller candle, not reaching the high of last week yet. Price percent oscillator still positive, moving up a little bit. Derivative oscillator gaining a little bit of upward. But look at what we see happening. Thought this might happen with the last candle. It did not because of some up movement. I think that was on Friday. We can look here in a second. But we had a red open box spinning top. Now we have a red down candle that's forming. This is our Heikin-Ashi candlestick pushing through our 2-day trend line just above the weekly. If this closes out tomorrow, of course, it takes us out of our Bitcoin trade for the time being. Derivative oscillators gone negative, already went negative actually in the last 2-day candle. So it preceded, that is our leading indicator, preceded the crossover going down. We look at the half day, what do we see? Saw where things have been going down for 2 days over the course of Monday, trying to move up a little bit, but nonetheless did not prevent that 2-day chart from crossing over. So let's see what happens If there's a huge upsurge in Bitcoin on Tuesday, it could sure pull the crossover back through. We'll wait and see, but be ready to, again, if you've not already taken some profit in that Bitcoin practice trade, you might consider doing that so that you don't have to ride down the losses. That is where we are, folks, as we end the day on Monday. We so appreciate you being with us. God bless, my friends. Stay at it. You can do this. All the best from the whole team at Charting Wealth World Headquarters.